Happy Friday, everyone. Welcome to your quick market update. Today is Friday, May 15th. Let's talk about what moved the mortgage rate market this week, and there was a lot. Inflation was a 1-2 punch. We got two hot inflation reports back to back this week that rattled the market. On Tuesday, the April Consumer Price Index came in at 3.8% year over year, hotter than the 3.7 expected and the highest reading since May of 2023. Then on Wednesday, the Producer Price Index, which measures what businesses are paying at the wholesale level, came in at a staggering 6% year over year, up sharply from 4% in March. That's the biggest wholesale inflation reading in nearly 4 years. As one economist put it, producers are feeling the full ripple effects of $100 per barrel oil, and those costs will eventually make their way to you and me. Sucks. The result, Treasury yields pushed higher, pushing mortgage rates higher, and the Fed is not cutting rates anytime soon. So let's talk about this. Why is oil so dang high, and why does it matter? Well, here's the question everyone's asking. The U.S. is producing and exporting record amounts of oil. So why are the prices still going up? It starts with geopolitics. President Trump rejected Iran's response to the U.S. peace proposal this week, calling it unacceptable. The strait remains effectively closed. And that matters enormously because roughly 20% of the world's oil supply moves through it. But here's what most people don't understand about why U.S. oil production isn't just fixing the problem. Not all oil is the same. California just received what may be its last tanker shipment from the Middle East. Significant because the state imports a third of all its oil from that region. So why can't California just get oil from Texas? The Rocky Mountains physically block pipeline construction. But even if pipelines existed, it wouldn't fully solve the problem because Texas produces light sweet crude, while California's and most of America's refineries are built to process heavy sour crude, which is what the Middle East produces. You can't just swap one for the other. Now, with that said, Venezuela produces the heavy sour crude we need, but that alone won't bring prices down. And here's why. Oil is a global market. Prices are set by worldwide supply and demand, not local production. So when a disruption happens anywhere, the Strait of Hormuz, a refinery fire, a pipeline outage, prices rise everywhere simultaneously. Europe doesn't produce its own oil, so European buyers bid up the same barrels you're competing for at the pump. And oil companies and fuel wholesalers are private businesses, so they're going to sell to the highest bidder on the open market and not at a domestic discount. Here's the bottom line. Hot CPI, hot PPI, closed shipping lanes, and global oil demand are all pushing rates higher. The Fed has an inflation problem with no easy fix on the horizon. As always, if you ever have questions, I'm here to help navigate this crazy market, and have a great weekend. Thanks for watching.